In yesterday class, I have discussed that how to calculate annual depreciation and how to calculate the percentage of depreciation. Once, which I had discussed yesterday class, that by giving one question, and that question is related with that how would you calculate the annual depreciation and also the percentage of depreciation in different situations. So now today I will discuss the journal entries for depreciation and also the necessary ledger account for depreciation, so that you will get the knowledge about what actually you have to do in depreciation. Are you all audible to me? My voice is getting to all of you. Say yes or no. Do it fast. So look at that. I am showing my back camera, which will be 11B depreciation, the topic I have written. In last class, I had also discussed the journal entry, what journal entries are required in depreciation. So you can see I am going to discuss again the journal entry first of all, then I will move towards to the ledger account. Okay, look at that. In depreciation account, first of all, you have to pass the journal entry for purchase of assets, purchase of fixed assets, which I had discussed yesterday. So I am doing it fast. So entry will be fixed assets account debit to bank account. Second, for sale of fixed assets, entry will be bank account debit to fixed assets account. Third entry is for depreciation on fixed assets. So entry will be depreciation account debit to fixed assets account. And the fourth entry is related with the profit and loss. Here, which I had discussed already, profit and loss account debit to fixed assets account, and second one is fixed assets account debit to profit and loss account. These four entries are required in depreciation. Is it visible to all of you? Yes, it is showing. Yes, it is showing. So look at that. Clear? First entry for purchase of fixed assets, that is fixed assets account debit to bank account. Second entry for sale of fixed assets, entry will be bank account debit to fixed assets account. Third entry for depreciation, depreciation account debit to fixed assets account. And fourth entry for profit and loss. Clear? This one I have discussed already in last class. So today the main part is I am going to discuss the ledger account. Clear? So now I am erasing this, and what are the necessary ledgers that you have to prepare in case of depreciation. Necessary ledger is first fixed assets account, fixed assets account you have to prepare. Second, depreciation account you have to prepare. Third, provision for depreciation account. Fourth, asset disposal account. Clear? Fixed assets account, depreciation account, provision for depreciation account, asset disposal account. These are the main accounts which are required to prepare in case of depreciation. Clear? So now by giving one question, I am discussing that how would you prepare fixed assets account, depreciation account, and also the fifth one, that is calculation. This is working note. Clear? So look at that. I am discussing first how to prepare fixed assets account and also depreciation account, and also how to find out the depreciation of annual of every year. Clear? Let me check. Someone wanted to take entry in this. Okay. Nobody is there. So no problem is there. Now I am going to discuss that how to prepare fixed assets account. When you are going to prepare fixed assets account, then you have to make a format of ledger. This is the format of ledger of fixed assets account. Fixed assets account ledger is here is the date, particular amount, again date, particular and amount. You have to follow this format, and this format will help you that how you have to show the depreciation account. Clear? Now look at that. I am giving a question. Date, particular amount. Again date, particular amount. Clear? Now look at that how you have to prepare fixed assets account. You have to write here the date, whatever this is, and you have to write here two bank accounts for purchase of assets. You have to write here two bank account for purchase of assets, which I have already been written in journal entry, and that journal entry is converted into ledger. So in ledger, first of all, what you have to write? For the purchase of assets, two bank account. Suppose you have purchased assets of 50,000 and depreciation is 10% per annum on fixed assets. Depreciation is 10% per annum. So for depreciation, you have to write the date here, and what you have to write in for depreciation? By depreciation account. This is annual depreciation. You have to write. Now tell me, suppose this one has started from 2015 April 1st. Suppose you have purchased your asset, fixed asset, April 1st, 2015. So you write to bank account for 50,000, and when you will complete 1 year after 2015, when you will complete 1 year, yes, it will be 2016 March 31st. How? By taking April 2015 to 2016 March 31st. This will complete 1 year. So you have to charge the depreciation for 1 year. Look at that, I am charging the depreciation for 1 year. Here is the amount 50,000, and when you will calculate the 50,000 of here depreciation, how? 10% per annum. So 10 by 100. It will be 5,000. So your depreciation amount is 5,000. Let me check. Someone wanted to take entry. Yes, one is there. Are you all audible? Are you all getting my voice? Boys and girls? Good. Now what I have written, look at that, the question that I am getting 50,000 and annual depreciation 10%. So 10% of 50,000 is 5,000. Now what you have to do? You have to balance it like ledger. How do you balance ledger? Like that. Here you write 50,000. Again you have to write 50,000 and balance it. 50,000 minus 5,000, it will be by balance CD. The date will be same, carried forward here, March 31st. This will be 45,000. 50,000 minus 5,000 is equal to 45,000. Now what you have to do? This 45,000 of CD you have to transfer in debit side as a BD. CD become BD. Carry down to brown down. So I am writing this one by balance BD place to balance BD. By balance CD become to balance BD. Same amount will carry forward 45,000 here. So you have to write 45,000. Clear? And date will be here 2016 has end. So on March 31st. So next month will be April. April 1st, 2016. March 31st, after March 31st, April 1st will be there. Year will be same because year is not changing, only month is changing. So again you have to follow the same method. You have to write two balance sheet here. If you have purchased any assets in this year, then again you have to write what? To bank account. If you have purchased, but I am not taking it. So two balance sheet will be there. Now next, the depreciation 2016 April 1st, after 1 year 2017 March 31st. Anybody is there in waiting room? Nobody is there? Okay. Now 1 year completed here from 16 to 17 March 31st. Again you have to write by depreciation account. How much? How much you have to write? If it is fixed installment method. Fixed installment method. Then amount of depreciation will be carried forward same, because amount of depreciation will be calculated in fixed installment method on original cost price every year. So 50,000 of 10%, again it will be 5,000. Again balance it 45,000. 45,000 minus 5, it is 40,000. Same you have to write, which you have written here, by balance CD. And this CD will be the same date, and this CD become PD for the next year. To balance PD 40,000. And date will be March here. Here it will be April. Here will be say 2017. Now one question is there. You can ask, sir, why are you doing again and again this? Because it is written in question that how many years you have to calculate the depreciation. So I have calculated for 2 years. If it is given for 4 years, then I will follow the same formula. Clear? Is it clear to everyone? Now come to the topic. Suppose on 2017 1st October, the machinery is going to sell. So at the time of sale, what you have to write? By bank account for sale of fixed assets. Suppose you have sold the machinery for 25,000. So from 1st April to 1st October, what will be the depreciation of it? Then you have to write by depreciation account. From what? 1st April to 1st October. April to October, if you will count, it will be 6 months. So depreciation of 6 months will be what? For 1 year it is 5,000. So for 6 months, it is 2,500. It will be 2,500 for 6 months. And then you have to find out if for selling of machinery it is profit or loss. Now check it. You are getting profit or loss. Then I am writing here. Suppose cost is 50,000 in this question minus depreciation up to 1st October 2017. How much? How much depreciation? 5,000 plus 5,000, 10,000 plus 2,500, 12,500. Now it will be 500 37,500 is a cost after the deduction of depreciation. Now the selling price is 25,000. So here is the loss because you are selling of fixed assets 37,500 at a less price 25,000. How much is the loss? 12,500 is the loss. So that loss you have to write here by profit and loss account and in bracket loss. How much it is? 12,500. Now your account is closed because here you will get 40,000 total and here also you are getting 40,000 total. This is the process of calculation of depreciation and profit and loss, and also how to prepare fixed assets account. Is it visible to you? Are you all getting the benefits of it or not? Are you all getting benefits of it? That how I have calculated profit or loss? Good.